Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Saridi, and the closing trades are looking very, very smart. I think we just have to start using that ticker in terms of the countdown to the all-time high level, because it's almost 20,100 at the index level. The all-time high was 20,222. So just 160 points away from that all-time high level. Hopefully soon, given that a lot of important events are lined up. Of course, we'll get the GDP data, the monthly options expiry tomorrow, and the exit polls coming in soon as well. So all of that would either put spanner to works or would take the Nifty higher beyond those all-time high levels into blue sky territory. We'll watch out for all of that. But sectorally speaking, it's autos, which is in the fifth gear right now, led by M&M. So that stock is holding up with a gain of almost 4%. Ditto can be said for Hero Motocorp and Motherson and Tata Motors. So ahead of that monthly auto sales data, the pack is fairly excited. IT is also making a bit of a comeback, starting with Wipro itself, which is up a good 2.5%. Coforge, Emphasis are some of the other counters. The only space, surprisingly, which is taking a bit of profit today is real estate. So after weeks and weeks of outperformance and sitting at those 15-year high levels, finally today there is some profit booking and underperformance from the real estate pack. Phoenix, Lodha, Sobha Industries, Prestige, all of these are in the red. But I have to say, Aisha, for this series so far, we have done amazingly well. For the Nifty, we're up 5%. For the mid-cap, small cap, 10 to 12%. And on track to become the best expiry of the year.
Yes, we are. In fact, just preempting that Santa Claus rally already at the 20K mark. Like Anisha said, we should be now running the countdown to that all-time peak for the index. 20,074, so it's no mean feat. We are almost closing distance to that 21K mark already. And it's an extremely lively broader market too. While we're talking about the Nifty psychological marks here, look at a PCBL. As soon as the news came out, they're looking to acquire Aquafarm Chemicals for 3,800 crore rupees. All of the group stocks, not just PCBL, they're all holding up a buzz in trade. This, of course, gapped up right from the word go. There's Aster DM, which is looking to sell their GCC business to the promoter-controlled entity. A price consideration of $1 billion is being talked about. So that's another stock which is a buzzer in trade. Manappuram Finance, wherein the management has stuck by with its guidance and saying that there's going to be a negligible impact from RBI's new risk weight norms. That stock as well seeing quite a bit of flurry, about a 5.5% traction coming in there. Or for that matter, the new listing. We're keeping our eyes on Antara Technologies' debut tomorrow, but look at what iRadar is doing, and I don't think there was any other expectation. It was supposed to be a bumper listing. That's what the grey market premium was indicating. A bumper one it has been. In fact, it's managed to consistently build on from where it even started off trade. Listed, of course, at a 55% premium to its issue price, ran up all the way to 70% odd plus as well intraday, and currently holding up 87%. Stand corrected, you're almost losing track of the kind of gains that you've made on iRadar just on day one itself. But let's talk about the index. Let's welcome on board Kunal, Naresh, and talk about what they're making of the market right now. We'll have Siddharth Khemka as well join in on the fundamentals. Kunal, maybe not this week, but next week seems like all-time high is given.
Why not this week? I mean,
Okay.
I still believe there are 2 days.
I was still giving some buffer, but yeah.
No, I think, the point about the market in the last 2 days, why the Nifty has managed to come out of the 90,800 mark. And I think the reason for that, according to me, I think is, the move in India VIX. And I think that's one of the major reasons why you've come out of a narrow range for the indices into a bit of activity or a trading, in a positive trading activity for the indices. So that mild rise in India VIX is adding towards the fuel which the indices need. The Bank Nifty is crossed back about the 44,000 mark. The put call ratios are very favorable as such for both the indices Nifty as well as Bank Nifty. I think it's a classical setup. So my belief is that if the VIX rises for another couple of days, which it should on the build up to the election results event, I believe that there is a possibility we may scale past about the 20,200 plus mark pretty soon.
Okay, yes, India VIX was higher by a good 7% yesterday, had gone past the mark of 12. Today, of course, it's higher by I think just 1%, and we should pull up the India VIX to make that point as to how that entire move has been, because for the longest time it was between 10 to 11 range. Finally, now at that 12 plus mark on the India VIX. Yes, that's today's move, but if we pull up the 5-day chart, that will tell you the kind of improvement that we have seen in the momentum there as well. But Naresh, one of the big talking points of the day has also been the Bank Nifty, right? And in the last 3 to 4 trading sessions, we have seen almost a 800,000 point rally on Bank Nifty already. Would you call it the bottom now? Is it finally breaking out?
So it's finally breaking out on the short-term charts, and we've started to see good momentum in the heavyweights as well. So today, the largest contributor on the Nifty in the bank Nifty is HDFC Bank. That's happening after a long time, crossing 1550, almost a 1 to 2 month high. Then you have Kotak Bank also making a pullback. You have ICICI Bank making a pullback, and the leaders continue to do well. So Axis Bank has hit a new all-time high. So very clearly, banks could take center stage from here, and a case comes up wherein we cross 20,200 and go towards that 45,000 mark on the bank Nifty as such in the short term. So overall, the bias is positive, and for the next at least 2 to 4 sessions, it would be large caps which could do better in the near term.
Okay, let's look at what's actually been holding up in trade in today's trading session. M&M, of course, is topping the charts. You've got a Hero Motocorp as well, which is holding good by nearly about a 3.5%. Tata Motors, another 2.25% move. And this after that stock already hitting that 700 rupee per share mark in trade yesterday itself. And then, of course, a couple of these technology names too are making a comeback. There's Infosys, TCS, HCL Technologies, Tech LTIM, they're all holding a buzz in trade. In fact, we should try and bring up the Nifty IT index itself that's already powering ahead. L&T, much unlike yesterday where it was an underperformer and a bit of a drag, that's participating. So is the case with an ICICI Bank. So some of the blue chips as well are now participating in the rally, and that's not quite the case with the big movers from yesterday. Look at Adani Enterprises, that's down 1%. Of course, nowhere close to undoing any of its gains from yesterday, but it's a laggard nonetheless today. Hindustan Bank, SBI Life, Divi's, Bajaj Finance, Titan, Coal India, NTPC, they're not really doing anything. Let's welcome on board Siddharth Khemka too then. Siddharth, hi, afternoon. In the next lap of the rally, do you see a sectoral churn at play?
Yeah, hi, very good afternoon. So definitely, I think that has been a case so far in this financial year that there has been a lot of sectoral churn, and valuations have played a big role in that churn. And some of the sectors which have seen consistent growth in terms of both earnings as well as a lot of sectors have benefited from a large order book, which is driven by the spend from the government side. So these sectors, if you see, the valuations have picked up, but there is a big sector, the banking and financial sector, which has been kind of an underperformer, and the valuations are now kind of in a comfortable zone. The earnings delivery has been consistent, and the compression in NIMs plus the higher base effect has now mostly factored in. Going forward, if we go by what the global commentary with the US Fed also indicating that the interest rate hike cycle may have peaked out, which could be positive, at least in terms of sentiments for the banking space, which could take up the lead from here, is the expectation going forward.
But what should one do with the real estate holdings? Do you think it's time now to take some profit off the table, or it's going to be a long bull run and stay put?
Yeah. So if you look at real estate companies, they have kind of registered the second best quarter ever, despite Q2 generally being considered a weak quarter because of the monsoon season and because of the seasonality. And you have seen a lot of the bookings generally happening in the festive season, which was in Q3. But despite that, we have seen consistently back-to-back quarters of very strong pre-sales data from most of the real estate companies. Also, the independent companies that have done analysis on the top 7, top 9 cities, demand continues to remain pretty strong. New project launches have been, companies have kind of controlled the supply, and new launches have been very gradual, and hence there is a big absorption of the inventory that has taken place. So we believe that the traction will remain healthy in the real estate sector. Plus, we also see a re-rating potential in companies because of the improvement in growth visibility, strong business, new projects pipeline, and the most important factor, cash flows have improved, balance sheets have been cleaned, and that gives a lot of comfort in the real estate pack. We prefer companies which are based out of Mumbai, so Mumbai region is something that we like. Godrej Properties followed by Lodha are our preferred picks. We have recently initiated coverage on Sunteck Reality, which is in the premium and luxury segment in the Mumbai metropolitan region. Again, a lot of new projects that they have launched. Premium luxury projects have seen a better absorption rate in the market, and again, one of the better cash flows and balance sheets within the real estate pack. So these would be our preferred picks, and we continue to like real estate in the current environment.
Right, okay, that's the take coming in on realty. PSUs, they continue to be the ones which are the big buzzers, and today too you're seeing a big move on a BHEL. A 6% move is what you're seeing on the stock right now. That's holding up very well. We've already seen how the new listing IREDA, of course, has garnered not just interest in the IPO subscriptions, but even on day one of its listing, that stock now holding at an 87% premium to its issue price. $60 is where that stock is right now. Kunal, from the PSU pack and ex-banks, what's looking stronger to you? I mean, in the past, we've talked about NTPC, Coal India, and now BHEL as well is joining the party.
So BHEL looks attractive at current levels. I would still believe that it's starting off a major multi-year uptrend, even after the breakout which you've seen for the stock, I think the last 1 week from 130-35 levels. In fact, I think end of October, the stock was almost at 115 or 16 mark. That was the low the stock had made. And I think from there, the stock has risen up quite well. So it's almost a 40% odd jump for BHEL from that kind of a low for itself. Now, the defense pack is something which I would be still keen towards. So I think the likes of HAL, BEL, they would still look very attractive even from current levels. So it's not just a V-shaped recovery which we are spotting onto many of these stocks, but the consistent buying, the strong volumes, backing the price up move, and lack of too much of time these stocks spend at lower levels. So that generally creates an urgency from traders to try and push up the stock prices. And I think that's one of the patterns which you're observing for many of the defense names, specifically the FNO ones like HAL and BEL. So those are the two alternatives which I would look to buy even at current levels.
Okay, so HAL from the defense ecosystem and BHEL from the power infrastructure ecosystem is the top bet. In fact, talking about power sector, it's also Torrent Power, which has seen quite a bit of charged up move today. At one point of time, it was up around 16-17%. It's off the highest point, but it's still holding on to gains of a good 12%. The other ones, of course, are the Adani group of stocks. Naresh, coming on the entire group, has seen solid recovery from lows over the last 2 to 3 trading sessions. What should one do? Book profits or just ride the momentum in Adani stocks?
So out here, there are different baskets also in terms of outperformance and the correction. So if you look at the worst performer, it has been Adani Total Gas, which has gone down from 4,000 odd levels all the way to 500 to 700 zone. So there may be the bounce back could continue, but that's not the place you want to be. The better performers out here have been the first one, Adani Power, which made a new all-time high today. So that's a stock which looks a buy on dips. And the next one is Adani Ports, which is, if we remove out the volatility we saw in February, it's getting closer to a longer-term breakout. Back in 2021-22, 900 was a major resistance that could break out going forward. So as an accumulate, I would go with Adani Ports as the top bet from the sector. The rest could see a bounce back, could continue, say Adani Enterprises till the time it does not cross 2700, 2800, a new trend does not start. So for now, Adani Ports would be the top pick out of the whole sector.
What's the top pick? We'll take a very quick break on that note, but ET Now and ET Now Swadesh are in line now with helping Indians rise with India. They've partnered with Sundaram Mutual Fund to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios via regular and disciplined investing. Nivesh Day, in fact, is being celebrated on the 15th of every month. So join us on ET Now and ET Now Swadesh and Sundaram Mutual Fund to learn how you can build your financial future with an SIP in mutual funds. Well, Well, autos it is. That's the one sector which has been holding out very well. Everything from an M&M to a Hero Motocorp, Tata Motors, that entire space is abuzz. Of course, tomorrow or day after onwards, actually, we'll have the monthly sales data for November and the festive period as well come on. And that's something that the market is going to be tracking very closely. Since we're on the subject, here's Bajaj Auto's ED Rakesh Sharma, who spoke with us exclusively, saying that they've had a stellar festive season.
We are working with our partners KTM on different fronts, and certainly the electric platform is one of them. But you will have to wait for the bike to be put on stage before I can say anything more than that.
You're also working on many other alternate technologies, including CNG, which you've mentioned often. What's the update there? CNG, your motorcycle, when is it going to come? Any timeline for that? Next year, any timeline for that?
Yeah, we have been major players in CNG. We have, it's not a new platform for us because we have over a 90% share in passenger auto driven by CNG. It's a very good solution because it mitigates a lot of aspects of pollution. It is, in terms of operating costs, much superior to diesel, and therefore wherever CNG network is expanding in three-wheelers, we find a wholesale transition from diesel to CNG occurring. And we have been at the forefront of this transition, leading this transition, and therefore we have a lot of experience in it. So the logical way forward was to try and see whether we can bring the CNG solution into motorcycles also. Of course, it gives us much less space and there are challenges, but our R&D is working, and hopefully next year a solution should be in the marketplace.
Okay, so that's the latest commentary coming in from Bajaj Auto. But what about the rest of the sector, and what should we expect with respect to the festive sales coming in the month of November? Shrishti is joining us with the expectations of how the month's numbers are likely to look like.
So definitely the festive season sales has done pretty well. There has been a strong festive season where two-wheelers happen to grow more than double in terms of, if we see the 67-day festive period, then the growth that we have seen in the two-wheeler segment is almost double what we have seen in the passenger vehicle segment, and that's what the similar reaction we are seeing in the auto stocks as well, where two-wheelers have grown around 18% and the passenger vehicle has grown 8% on a YOY basis in the festive season. But let's talk about the big trends that is shaping up in the segmental performance. Then for two-wheeler, we are expecting that the post-festive season sale has been quite strong. Not just that the festives were quite supportive, even that the dealers are showing some momentums because on the back of the wedding season sale as well as the recovery in the rural demand. Other than that, in the passenger vehicle, the discounts for the entry-level cars have been higher but negligible for the SUV segment, which tells you that the demand is still there. But some of the reports are suggesting that going ahead in 2024, there could be some moderation in the passenger vehicle sales. Coming to the tractor division, that has not done well because the benefits of the government-led subsidies are reducing, coupled with a slowdown in the overall demand. While for commercial vehicle segment, though this time we can see a decline on a month-on-month basis as well. But going ahead in the next year, the dealers are quite optimistic because there is an anticipation of the increase in the freight rates in January that should help the demand further. But let's talk numbers then. Firstly, from the passenger vehicle segment, we are expecting almost a double-digit growth when it comes to Maruti as well as M&M. We are expecting a 12 to 26% growth on a YOY basis, while for Tata Motors passenger vehicle segment, the expectation is 48,608 units. Coming to the commercial vehicle segment, we are expecting largely a single-digit decline in terms of the sequential growth when it comes to Eicher Motors, VECV, Tata Motors, Ashok Leyland. The sales is expected to be just almost flat or a mild moderation on that front. But from the two-wheeler, if we see the YY sales data, all these companies will show you stellar results, and that's on the back of a strong festive in the month of November. Lastly, from the tractor division, all eyes will be on M&M tractors, where we are expecting close to 35,000 of units in the month of sales, while for escorts, the expectation is close to 9,000 of units, but not much expectation. But like we have been highlighting, that the two-wheelers could continue to surprise on the positive front. So this time we have already seen some of the reports suggesting that, so all eyes on the two-wheeler segment.
Okay, all eyes on the two-wheeler segment. But Siddharth, what's your take? Finally, the two-wheelers are coming out of a slumber, because of late we have heard the commentary that last couple of months have been better in terms of rural demand.
Yeah, Aisha. So I think that's the case. Exactly what we also did our channel checks, and that suggests that there has been a very healthy festive season for the entire auto sector, be it the two-wheelers, be it the passenger vehicles. But the story continues for two-wheelers post that as well, which is what our channel checks are also suggesting, that and that is leading to us changing our sector preference towards two-wheelers over passenger vehicles. MHCVs have continued to do well. Passenger vehicles, there is a very high base going forward, and there is some slowdown that is expected, and that is why that segment is kind of taking a back seat, including the tractors. Again, while the rural sector is picking up and supporting some of the sales for two-wheelers, the same is not the case with tractors. If you look at some of the within the two-wheeler space, stocks have done well, but if you look at particularly our preference is towards Hero Moto, purely in terms of valuations. They are much comfortable compared to Bajaj, which has also done well. But Hero recorded its highest ever sales of 14 lakh two-wheelers during the 32-day festive season, which started from Navratri to Diwali. They have also done well in the premium segment, the Harley Davidson and the Charisma in the phase one, where they already have 200 premium outlets and planning to further increase to 500. Plus, to add to it, post the festive season, now the demand from the marriage season, which is we have all heard about the great Indian wedding season in the month of December, which is likely to fuel further growth for two-wheelers, including Hero Moto, which is our preferred pick in the two-wheeler space. We have a target price of 3,850.
Okay, that's the take coming in on where you're seeing currently strength in the auto pack. Of course, Tata Motors has been charging up quite a fair bit today. But Naresh, within the two-wheeler pack, what is it that you're liking? Hero Motocorp, Bajaj?
So Hero Motocorp has been the favorite. The stock has already moved up quite a bit in the near term, but still it's just the start on the longer term basis. So even today, the stock quotes much lower than where it was in 2018. So still a buy on dips. Any dips back to 3,500 odd levels would be a buying opportunity. Overall, would have a target price of 4,000, 4,200 on Hero Motocorp. So that's the best bet in the two-wheeler pack. The rest, Bajaj Auto, as well as TVS Motors are overbought on the short-term charts as such. So I'd be looking out for a buy on dips on Motocorp and continue to hold on to whatever you have.
Take coming in on autos right now. There's Manappuram, Aarti Industries, Jubilant Foodworks, which is also seeing quite a bit of spike, about a 4% bump up there. Muthoot Finance, which is holding up a good 3% as well. So these are some of the pockets which are looking good. Actually, the entire QSR FMCG space is a buzz, because look at a move on Britannia also, for instance. That's also holding up a good 2% as we speak right now. But we'll take a very quick break, come right back. We'll continue tracking markets.
Okay, welcome back. Well, Nifty is comfortably above that 20,000 mark, very close to 20,100 to be honest. It's Bank Nifty which is powering ahead. Auto is doing well for itself. It's only real estate pack which is a bit on the back foot. But in terms of the individual movers, it is BHEL which is doing quite well. Torrent Power, you have CDSL, Manappuram Finance, BHEL, Aarti Industries, and a whole host of these companies. In fact, Devang Mehta is also with us. Devang, let's start with Gold Financiers itself. Manappuram Finance, Muthoot Finance, they're up 5 to 6%. Of course, in the analyst meet, they have reiterated their guidance. But would you be a buyer in any of these names?
Unfortunately, I don't track this space very closely, but yes, today's market rally has been attributed to a lot of factors, right from even gold prices moving up to, I think, almost all the asset classes today, or all the sectors rather, have sort of shown a good bit of traction. So I wouldn't be able to comment specifically on those businesses.
The rest of the NBFC pack and the banking names, and especially the mid-size and small-size banking names.
Yes, ideally, the entire basket, you may say the financial basket, or as such, large cap banks, mid cap banks alike, all this had sort of underperformed the overall market in the last couple of months. They were sort of just getting dense. I think credit growth for most of these banks as well as NBFCs had been quite robust. And when we see vehicle sales, when we talk about festive sales, I think most of these companies would deliver good set of numbers come January. So the October, November, December numbers which trickle down in January, February would be good set of numbers. Also, whatever the risk exposure guidelines that RBI came out with, the stocks, some of the businesses reacted to that, some of the NBFCs reacted to that, some PSU banks reacted to that. But probably, I think that's also sort of forgotten by the markets. That's the sentiment for all of us right now, that market is extremely bullish, and it's sort of keen to ignore this set of news as well. So yes, I think good that the financial entities or the financial side of the market is also starting to perform, which has generally underperformed over the last 3-6 months.
In some of these banking names in the NBFC vertical, but on the losing side, it's Ether Industries down about 8%. Thomas Cook, Honasa Consumer, CSB Bank, etc. In fact, Honasa Consumer is down 4%. You have Zomato, which is doing good on account of that block deal and that supply pressure going away. Devang, from this entire new age vertical, which are the stocks that you would recommend to buy?
I think most of these companies have sort of, I'll not say these companies have bottomed out, but some of these companies have started to show good traction. There was at least some of these companies have started to become EBITDA positive, which augurs very well for them. Though we have not sort of invested in any of these companies, we feel India is more a market where profitability is valued rather than only revenues. Yes, we keep our eyes open. We are watching this space, but right now, as such, don't have any recommendations. Have not bought it for any of our clients so far.
Right. Okay. Just, catching hold of some of the other buzzers. So M6, for instance, has taken a bit of a pause there. That stock, of course, has been doing up very well. There's NMDC, Adani Enterprises, JK Cement. These are some of the laggards in trade today. Within the large caps, there's Hindalco, India, Bajaj Finance and Hindustan Bank, which is a bit of a laggard as we speak right now. SBI too is seeing a very tempered move, similar as the price action for NTPC as well. Devang, curious to know what your view has been on IREDA. It's been a bumper listing, no doubt, and one wasn't expecting anything else either. Do you think after this 80% kind of premium, it's still a buy?
I think difficult to say a buy, but let me also mention that it's an extremely niche company, right? So India is in need of sort of renewable energy right now as we talk, and this is an NBFC which the core business of this is to sort of fund the renewable energy sector. Given the government thrust on it, given the definition of ESG, this company belongs to sort of that generation where extremely it's critical that environmental clearances are going to be difficult over a period. And when you talk about renewable energy and India's government thrust into it, I think this is the top recall that people will get into. Apart from it, the financial performance, the mini Ratna status getting into a Navratna over a period, I think also augurs well. Sentiment for PSUs have generally been good, and I think the sector that it is in, it's clearly a sort of a monopoly or rather an oligopoly. It's a durable competitive advantage which this company enjoys. So my sense is people who have sort of got an allotment will hold on to it. Yes, there are a lot of listing gains. People would take onto that, but these are companies which sort of over the longer term create good wealth.
That also reminds me about highlighting what PFC REC have done. Year to date, they've also been some stupendous performers. If we can just bring up those intraday graphs for PFC REC, both power financiers, because they as well have seen quite a bit of move coming in. 132% of a move coming in on PFC alone, and similar has been the return made on REC too, 194% move coming in, and part of the rally has really happened in the last 6 odd months or so. Rish, do you think PFC REC still show strength on the charts?
So every time we suggest that there could be a little bit of a pause, the stock goes through a 4-5 day correction, 4-5%, and again makes a new high. So overall, the stock is overbought in the near term, but has not seen any major correction. So one has to be keeping a strict stop loss. Now, the strict stop loss, trading stop loss would now be at 310, 315 levels. So overall, the trend is positive, momentum is positive, but overbought quite a bit on the short term. The stock has gone up from 130 in June to almost 330 now. So time to be a little cautious. Be ready to exit on the way down or keep trimming out here, not a buy at current levels.
Latest coming in on some of the power financiers, but since we are talking about IPOs and listing, Devang, what's your sense on Tata Tech? Spark had actually come out with a detailed note in terms of the comparison with the rest of the companies as well. What kind of listing gains one should expect for the lucky ones who have actually got the allotment? And if not, should you buy tomorrow?
I think yes, it will depend upon the price at what it get listed and at the valuation which it will command. Yes, on the IPO side, it was quite reasonably valued, and as such, there was a lot of appetite for investors because there was something left on the table. Coming on the business side, yes, it is into a extremely niche space where there are very few people who sort of can operate. It's a business where entry barriers are sort of high. There are companies like Tata LXI, there are companies like L&T Technologies, which are into that type of engineering research and development type of work, or artificial intelligence or robotics. But this is more a niche, and given the volume that the auto industry is going through, given the changes that the auto industry is going through, and it's the next 3-5 years belong to the Indian auto industry as such. If I can make that statement in terms of everything, the migration to EVs or whatever upgrades are happening per capita consumption of vehicles. So yes, it's a beautiful sector to be in. Again, as I said, it's a great business. A Tata company coming up with an IPO after 20 years created a lot of buzz. It's not as euphoric as it should get because it was not very highly valued. Yes, post-listing, probably we need to review that at what price it gets listed. Looking at the IREDA listing today, I think a bumper listing seems to be on the cards.
Coming on the Tata Tech IPO and how you should visit that one. So the valuations were comfortable, at least at the IPO price. Whether it will be so on the listing price or not is something that we'll watch out for. Separately, in terms of the market mood right now, it continues to be the banking names that are doing well in the trading session. Kunal, your take as to which are the banks do you think that could lead the charge going forward as well, the individual names, because Axis Bank is now 4% higher.
So I think Axis Bank is the prominent one because that's a large cap private sector name which has made a good comeback. It's managed to break past that September 2023 highs, 1050-55 for Axis Bank. When you do a relative comparison with the other names, of course, the likes of HDFC Bank, ICICI Bank are still far lower than they are September as well as the previous highs for themselves. IndusInd Bank is also not showing any kind of a major strength in terms of momentum. Even Kotak Bank is very similar. So from the large cap private sector banking names, I would still believe that Axis Bank could lead from current levels. And I think this inverted head and shoulder breakout about 1055 mark for Axis Bank, I think could probably play a lot more positive boost to the stock price over the near term. We could probably expect the stock to head towards 1100, 1125. But I also sense that from the other names, AU Small Finance Bank is something which is also come up on the breakout kind of a mode. 740, 45 is where the stock has been trading, and that's again a pattern of an inverted head and shoulder spread over the last 2 months for AU Bank. So that's another chart which looks attractive.
Right. We were just touching upon the strength in PSUs. Devang, wanted your sense in, and this is on the light of the big move that you're seeing on BHEL, for instance, today, and also the other PSU packs. Just wanted to understand, where is it that your biases or preferences lie?
Asha, yes, I think this PSU, most of these PSUs are aligned to CapEx, right? CapEx or power. Most of India's PSU, if you can relate to, be it NTPC, be it Power Grid, be it the companies that we talked about, be it REC, be it PFC or BHEL, most of these companies would cater to something which is called capital expenditure. And I think government thrust on capital expenditure in the last 2-3 years particularly has been great. And this being again an election year, I think a lot of projects are getting completed, a lot of projects are even getting built, a lot of greenfield, brownfield projects are getting commissioned. So yes, even the private sector has sort of jumped into the capex bandwagon. So yes, these are companies which have come out of a multi-year sort of a bear cycle. That there are legs for a lot of these companies for the next 2-3 years, be it defense, be it something related to aviation, be it railways. So yes, this time it's not just the story. It's this time a lot of these companies have come up with revenues and are also showing use that sort of a robust type of earnings growth. So yes, most of these companies would tend to do well, but as I said, there is a limit to what a valuation can go up, or just stories would not sell. These are most of these companies are delivering right now. So yes, probably one can stay put if they have bought these stocks.
But hold that thought, Devang. Let me actually bring on board my colleague Sharat to talk to us about what's happening in the entire RP, Sanjeev Goenka group as well, because a lot of those stocks, right from RPSG Ventures to PCBL to Spencer's Retail, they're all firing up. What exactly has happened in the entire group, how the stocks have moved, and what are the trigger points? Let's go across to Sharat to find out just that.
RP Sanjeev Goenka group is in focus, and in the month of November itself, all the stocks in this group have actually rallied between 13 to 47%. Now looking at the market capitalization of the group, that has also increased by almost 50% in 2023 and currently sitting above the rupees 45,000 crore mark. A lot of corporate actions have been reported recently from the group companies, and firstly I'd like to pick out PCBL, which is also buzzing in the trade today. Over here they have acquired Aqua Farm Chemicals for roughly 3,800 crore rupees. Looking at the deal, it has been value accretive and the company will be moving towards a high margin business model. Also RPSG Ventures, recently they announced that there might be a potential listing of their FMCG business, and the 2M brand is also getting strong inquiries. Spencer's Retail would also be in focus, where Nature Basket, which is an arm of the company, will be reducing its debt of roughly 100 odd crore rupees, and the sale of certain part of company's minority stake would also be under consideration. TSC is the cheapest valued amongst the private power players, with a forward price to book ratio of almost 1 times. Now if you compare the First Solutions, the IT BPO arm of the company, of the group, you see that is also actually coming in at roughly evenly priced amongst its peer. And lastly, PCBL would also be in focus, where the 12-month forward P ratio stands at almost 18 odd times, and it's cheaper when you compare it with Himadri Specialty.
That's the take coming in PCBL and the other group stocks, which are holding out very, very smartly in trade today. We've been, of course, marking what PCBL is up to. Remember, they're looking to acquire Aqua Farm Chemicals for about 3,800 crore rupees. There's Zomato as well, which is up a good 2%, although it's off from the day's highs. There was that block deal which happened earlier today, a 3.4% equity changed hands, and there are reports doing the rounds that Alibaba Group most likely would be the seller in this block. There's Yatharth Hospital, that's down about 12%. They've received an order from the commissariat of Madhya Pradesh, of one of the constituencies, and saying that the company is currently engaged in legal discussions. That's the clarification coming in from then. That stock hasn't seen any recovery coming in. Gateway District Parks, that's the other stock in focus. That's also down about 4% or so. Axis Capital has downgraded the stock. A target price of 120. They're saying that the recent stock outperformance leaves really modest room for any upside from the current levels. That stock lower by about 3.5% or so. But Devang, where are the contra bets in the market? IT, for instance, is one space which is doing well today. You think that can be relooked at?
I think yes, two spaces which sort of are export oriented. No marks for guessing. Yes, IT and pharma. Pharma has typically done very well. Some of the pharma companies have actually done very well, and some of the companies had come up with good set of numbers as well. IT, yes, was sort of a mixed sort of quarters. Some companies came up with decent guidance, and some companies sort of missed the estimates completely. Now I think both these sectors were under the overhang that the entire globe is still sort of shrinking. That thought comes out of the that comes out. Why is it's very important to now say that if the narrative on the interest rate and inflation, and if higher for longer theory or the narrative is getting challenged, I think the demand scenario in US probably would start to sort of come out as well. Most importantly, I think everyone has a view, the street had a view that the Fed would sort of not decrease rates at least till the mid of the next year. But now it seems like the Fed would blink a little more. And if the economy again sort of does not go into a larger slowdown or recession, which was sort of anticipated, I think these sectors will do well. Yes, IT demand can come back. These are contra bets, if you ask me. Yes, IT can be a little bit of a contra bet from now on. Of course, not a bet where you could sort of target 20-25% type of return, but somebody wishing at 12-15% type of return over the next 2-3 years, CAGR can very well be possible in the IT sector.
IT could be one of those contrarian bets for steady returns, but what else is happening in the market? Let's actually go across to my colleague Vamakshi to get a sense as to what we should expect from the Q2 GDP. The data will be out tomorrow, but let's just get a sneak peek as to what the expectations are. Vamakshi?
Well, yes, broadly the expectation is that GDP growth could moderate in the second quarter of this financial year, but nevertheless it is expected to stay above the RBI's own projection of almost 6.5%. In the second quarter this time around, GDP is expected to grow at around 7% as compared to 7.8% that we saw in the first of this financial year. Now keep in mind that the estimates for GDP growth this time around range anywhere between 6.7% to 7.1%. Let's also look at some of the sectoral expectations as far as GDP is concerned. Let's first start off with the agri sector. The growth here is expected to be muted as per Nirmal Bang, coming in at 0.75%, mainly based on the first advanced estimates of Kharif production, which have not been quite promising. On the other hand, industry growth is expected to pick up to almost 8% in the second quarter as compared to 4.6% seen in the first quarter, with contributions across utilities, manufacturing as well as construction. The services sector definitely is expected to slow down from as compared to the first quarter, wherein the growth was almost at around 10%, and it is expected to slow down to 7.3%, but this growth is still strong nevertheless. Services sector growth is expected to be healthy, but there is some drag that could be expected from lower government spending. So overall, the GDP's growth is expected to come in at 7%, and this implies that the economy in the second quarter seems to be holding up quite strongly despite higher rates and global slowdown. But what about the second half of this year? Well, largely the expectation is that GDP growth is expected to decelerate in the second half of this year, and a couple of factors for that would be a slowdown in the post-festive consumption, expected slowdown in credit growth, as well as patchy rural recovery amid sluggish global growth. So largely those were the expectations coming in for the GDP in the second quarter.
That's the take on what to expect from the GDP, although the market is going to be keenly awaiting all, the sales data in terms of the consumption pointers and whether or not it actually hints towards a rural recovery. What's been the kind of festival demand that we've garnered in the last 2 months or so? Part of it, of course, we'll get through the auto sales numbers for the month of November, wherein Bajaj Auto exclusively already us, like we just highlighted, that it's been a bumper festive season for them. So let's see what the reportage has been from the rest of the pack too. But Tata Technologies, that IPO, or rather that debut, hits the street tomorrow. So that's going to be all excitement around that. But Devang, what's your take here? Tata Technologies, still a subscribe or a buy on day one?
Yeah, so I think it was an excellent sort of an IPO which left a lot of meat on the table for sort of people to make money, and the response was extremely good. Tata IPO coming after 20 years, I just made this point, was an extremely sort of a good IPO in the pipeline. Plus, what is important is that this is a niche company again into sort of ER&D, operating in an environment. We were talking about autos earlier, that how auto sales are going to sort of do extremely well for the next. Well, there are only companies like LXI and LAT Technologies which are a little bit of comparable companies. So yes, I think people who would have sort of got this IPO would laugh all the way to the bank. But my sense is that it's extremely good hold rather than selling off on the first day, which a lot of times people are tempted to. But if somebody holds it for the longer term, yes, what price it gets listed at that point, what is the valuation? That's a little bit of a monitorable that we need to do rather than giving it a blank as a buy recommendation.
Sure, point taken. So let's see how that one lists tomorrow. But you also have LIC that's been in focus on account of a new product launch that they have made, and this is in line with what my colleague Anurag had previously reported as far as the expectation goes. But Anurag, tell us the importance of this product and the details.
So it's a non-participating product with a guaranteed return. Jeevan Utsav, it has been launched from today, and LIC is marketing this product. All their agents are marketing this product in a big way. And as per the few states, from 5 years to 16 years, and minimum basic sum assured is 5 lakh with no maximum limit for sum assured. And this product promises a 10% of sum assured as a regular income. The payout options are 2 payout options, regular income and flexi income benefit has been promised by the LIC in this Jeevan Utsav product. And by this product, LIC want to increase their non-participating market share. Presently, LIC holds around 10% of their overall premium from non-participating products, and they want to increase it by 15%. So going ahead also from month of December to month of March, LIC will be coming up with 4 new non-participating products also.
Okay, point taken, but it's the Nifty which is actually holding up very, very smartly, 20,100 at the index level right now. It is Axis Bank, which is high by 4%, M&M is high by 3.5%, Hero Motocorp, Wipro, HDFC Bank, these are some of your other top gainers. Banking space is definitely doing cartwheels, a 700-point rally on the Bank Nifty today itself. Don't remember the last time we saw such a solid intraday move on the Bank Nifty itself, and the bulk of that rally has actually happened in the last couple of hours. So apart from Axis Bank, there's Bandhan Bank in focus as well, and look at that move on HDFC Bank, 2% higher. ICICI Bank too is higher by almost 2%. Naresh, from the banking space, give me your top 2 stock recommendations.
So the first has to be Axis Bank, clearly, because the stock has shown relative strength. So Axis Bank remains the top bet. Second would be looking at an IndusInd Bank, which is again another relative outperformer, not moving up today, but structurally these are the 2 names which have outperformed and been relative outperformers for the last 1 month, 3 months, etc. So I'll go with the outperformers rather than the laggards.
Taking some BTST trades as well on that note. Kunal, on your list?
So I'll go with Tata Motors as the first stock to buy, recommending at 700, 710 levels where the stock is trading right now for a target of 750, stop loss at 675. And Aarti Industries is also another stock which is completing a double bottom breakout on the weekly charts. So that's a buy, 600 as a target, stop loss at 530.
Right. Naresh, what about your BTST trades?
So first would be a buy on Axis Bank, which has moved up quite a bit in the near term. Would keep a revised stop loss at 1,055, target price of 1,075. Second would be a buy on PVR Inox. The stock has broken out today. Stop loss at 1,695, target price of 1,750.
Okay, so that's the top bet coming in from Naresh as well, PVR Inox. And looking at the initial bookings for Animal, it seems like that stock too is in a good setting. But for now, we are wrapping up the trading session. 20,100 at the index, just shy of that mark actually. The advanced decline ratio is pretty smart. Banking index is the place where a lot of action was today. And then of course the auto sector. Okay, within the auto pack, it was M&M, which was doing quite well for itself. That was high by almost 4 to 5%. You also have names like Bajaj Auto, Hero Motocorp. These were the names that we are watching out for. Axis Bank, a good 4% move, and HDFC Bank sitting high by 2%. Adani Enterprises down 1.5%. ONGC, Divi's Lab, and then Nestle. These are your index losers as far as the market is concerned today.
Yeah, but Axis Bank, HDFC Bank, I think are going to have a large contribution to the way the Nifty has performed today. As of course, there are the bright pockets within the broader end of the market. Can't really take your eyes off from IREDA and how its day one debut has been. What a bumper listing. It's closing in with an 87.5% premium to its issue price. So it's been a solid day today. 60 bucks is where that stock closes in. Manappuram, BHEL, RT Industries, LIC Housing Finance, Muthoot Finance, they've all had a splendid trading session. With that, we're going to wind it up right here in this edition of Closing Trade.